Okay, I think we're good to go. I think we are good to go. Let me check. Should be live. Hello, hello. Okay, looks like the chat is responding, so signs of life, always welcome. Happy Monday. Hope everyone's doing well. Hope everyone had a nice weekend. Excited for the week ahead, etc., etc. Does the music sound okay, volume-wise? It should be very faint, you know, just to fill the gaps. Nothing too crazy. Can I crank up voice a little bit? Yes. There you go. That should be slightly better microphone-wise. Volume low, volume perfect, music is perfect. Okay, that's two perfects. I think we'll go with that. Okay, awesome. Thanks for joining me, us. It's just me on this fine Monday evening. We've got plenty to talk about, so let's begin. First things first, of course, thank you to Blockfolio, the sponsors of Technical Roundup. Couldn't do this without them, so visit them in the description below to show your support, or wait until we have some cool offers to share with you in the near future. But Blockfolio, sponsors of Technical Roundup, thank you very much. Imagine a mobile trading app like Robinhood, but one that actually works and lets you trade. Wouldn't that be great? And that's what Blockfolio is. On a slightly more serious note, as I've said before, the Duck and I had a play around with the app. KYC took 2 minutes. No fees on trading or asset swaps. Like, it's cool and it works, right? You know I keep it real on this channel. It's cool, it works, they help us, so I'm telling you that Blockfolio warrants your attention. So that's that. Nothing more, nothing less. Yeah, so let's get into it. Also, if you're watching either live or the recording version, if this video gets to 400 likes, I will do an extra live stream this week, which will be 100% dedicated to charting your shitcoins. I will sit here for like an hour and a half, 2 hours if need be, and we will go through every single chart that the chat asks for in whatever detail is required. So let's hit that target and we'll have an extra sort of catch-up hangout session without me rambling about Bitcoin and ETH for however long that normally takes. That'll be a fun one. You know, one of those brainless chart monkey streams. People like it, so that's on the table. Steve says, I want paid to be charted. Yeah, that's a fun chart. Okay, awesome. Let's talk about Bitcoin first. We'll go over my little overview type of thing. So let's begin. I don't have anything to add on the monthly. The monthly's been kind of devoid of context to some extent, given or following not even the 20k break, but the 14k break, more or less. So until some sort of structure forms closer to where the market is right now, the monthly chart is going to be of limited use. As I mentioned before, the only use case, if you will, for the monthly time frame is having the monthly open plotted, right? And that would just mean that if March starts turning into a shitty month, we'd see it on the monthly chart. Okay, by virtue of price trading below the monthly open. But we're still not there, so that's kind of the only reasonable insight, I think, that I'm happy to discuss on the monthly time frame. The weekly is sort of similar. The only real area that's a standout area is the same old pre-breakout range at 32 to 38k. This is your kind of do or die trend continuation area, level, whatever, and anything above it, or kind of below it for that matter, isn't that significant. So you're looking at, you know, if we look at the range that price is within right now, the weekly time frame doesn't give us a whole lot of context. So until we trade, or until such time that we trade lower, or this turns into something sexy or actionable, I'm gonna again take it easy on the weekly time frame. And that's something normal that you shouldn't be afraid to do. Like, you look at a time frame and think, okay, this is clearly the best structure or the level I want to trade on this time frame. It's fine to just ignore everything else. You don't need to have like 10 weekly levels, 10 monthly levels, 10 daily levels, trying to kind of arbitrarily populate your charts. Just highlight the stuff that you want to trade, structures where you think risking your hard-earned money is worth it, and then keep everything else for the chartists, right? Now going on to the daily time frame, this is where I think things get interesting. Let me just overlay the levels that I've got and that I'm working with. So the title says bull market continuation is close, one final obstacle. I don't clickbait, so I'll just be straight up. The final obstacle is the nearest resistance to price that is currently being tested for the third time. And it's this pre-breakout range cluster thing, rectangle box, whatever you want to call it, at 51, 52k, or just above 50k, however you want to define it. Structurally, it's not really the most amazing thing on the world on the way up, right? You had an impulsive break, a bit of consolidation, and then the final rally that took us to all-time high, and then it's been a bit more significant, or significantly more valuable, if you will, or active in the market on the underside as opposed to on the top side. So you've had one test following the immediate breakdown. Second test, I count this as one because I like to count swing touches, not just candlestick touches. So one test on this side, two tests on the retest, and now in the process is test number 3. So this is the only obstacle I see before price shoots up towards the all-time high and probably breaks it. And that's it, right? Again, very straightforward title. Bull market continuation is close. One final obstacle. What's the obstacle? Daily resistance at 51 to 52k. Strong daily closes through it. It probably gets sent at least towards the high, but probably through it as well. And you know, when price spends a lot of time at a level and offers multiple touches and starts to kind of grind into it or consolidate, volatility falls off, whatever, when those levels break, they tend to be pretty impulsive, right? You move from low volatility, and then if the level gets rolled over, volatility picks up in the process as well, and those tend to be very impulsive moves, right? And you can just tell even without the level, we've just had a period of consolidation or ranging, and consolidation precedes trending moves. So long story short, 51, 52, resistance, third touch. If that breaks, the roof probably goes on Bitcoin. Which would be cool, right? Another thing I want to note about this level is how price has been reacting. Like, can we get a sense of how strong or weak this level is given the price reactions? And I think you can build sort of a case for it. It's not perfect, but just some observations. So when we first, I mean, the breakdown from the level, very impulsive, right? That's straightforward. But then look at how that's developed with each consecutive touch, right? So you had this first real retest of the level from the underside, and the market really took a dump, right? Big move down here, broke market structure, you know, even traded lower a bit after. That's like a big reaction from that level, okay? So this is kind of the first leg that we had from that reaction. Then we look at the second test. You did have a reaction, but relative to the last one, it's actually a higher low, right? So the first test nuked it all the way here. Second test still nuked it, but it made a higher low relative to the last time the level was tested, okay? And now we're currently, I don't want to like draw this kind of line yet because it's not entirely clear whether this retest has been resolved, but at least from the available evidence, and if this trend is going to persist, the level seems to be getting weaker over time, given you're making higher lows with each test. So if we get a continued reaction from this type of area, you generally expect support to hold, right? Or at least for the previous low not to get violated. These are pretty tentative conclusions. I don't trade off of stuff like this, where I say, well, look, the reaction's getting weaker, therefore I'm going to buy the potential higher low. Like, I think you can do that. I personally don't. I just use it to get a gauge or an idea of how price is shaping up at a level, how much supply is left to sell up there, if you will, and also gives me some sort of gauge or indicator for how impulsive the break is going to be when/if it happens. Or more simply, like, who is running out of steam at this level from the evidence that's available. And for me, given you're getting consecutive retests which are making higher lows at the moment, right, it looks like from what's available. The sellers are running out of steam. Does that mean you're long resistance? I used to trade like that. I don't anymore. I think there are some cases in which it makes sense to get involved on the underside of a level or close to it in anticipation of a break higher. But as someone who tried to add that as a trading setup as part of my trading system and didn't find success, it's just not something I do. Straight up, right? So for me, it's going to have to be the more kind of conservative route, that either an intraday flip, which looks nice, although you're unlikely to get something like this, or just a daily close through the level. That's probably a green light to trade at least towards the old high. But I really think a volatility expansion, if you will, through an area like this, at that point the high is really vulnerable, right? Especially in the context of an all-time high. Like, for the most part, all-time high makes for a really shit level of resistance. It's not where you want to sell. Even thinking about it logically, when price is at or near an all-time high, the number of positions or holders, etc., that are actually down on their investment or have some sort of incentive to sell is pretty low. So, you know, it's almost just easier to overcome those levels and easier to make an all-time high rather than to defend an all-time high on the way up, if that makes sense. And that also kind of skews risk-reward calculations to some extent. So you can make the argument like, okay, you know, if the market breaks through this level, let's say it's closed above, that's where you can get a long entry, right? Just hypothetically. And then your target will be the all-time high, etc. Now, what a lot of people seem to think, and I get it, but I just disagree, is that, well, you know, I don't want to enter on a break of the level because then my risk-reward is shit, because resistance is, you know, at the high and I'm entering like reasonably close to it, so it's a bad trade. Now, the thing is, when you're trading towards an all-time high, if your bullish idea is correct, and if the context is kind of set up in this way where you're expecting volatility expansion generally, you kind of have to ask yourself, does it make sense to perceive or to interpret the all-time high as a significant level of resistance at which to take profit? And in a strong market, in a bull market, whatever, the answer tends to be no. As a result, when you have people making those risk-reward calculations, like, okay, even let's say you have this level here, right? One I spoke about previously, one of my short videos, the first support break before this whole move down. So you could say, you know what, I'm going to be super conservative. I don't want to trade this level. I want to trade this move here, right? On the reclaim of 55k or thereabouts. And then you'll get a normal critique of that saying, well, I don't want to trade up here because look, the risk reward is really shit. You know, if I put my stop like down here and then my target is the all-time high, I can't even get like one risk reward. But again, the assumption there is that the all-time high is resistance. Very rarely is that the case. So those risk reward analyses aren't accurate. If anything, you're expecting the roof to go off of this thing if your idea is correct and for it to trade 60k plus. Okay, so when you're trading towards through all-time high type of levels, or levels where you're just not expecting a lot of resistance, like, ask yourself, is it a real trouble area? If it's not a real trouble area, then expecting it to act as one doesn't make sense, and therefore using it as a take profit, you probably won't feel great about it. Otherwise, range-wise, you know, these conditions could continue. As I said, we don't really know how this is going to resolve, and I don't have a setup that lets me buy resistance. So if the range continues, on a daily time frame at least, the same old stuff from the previous live stream applies, whereby we have resistance, or the top side of the range, 50k just over, 51, 52, and then you've got support, or the bottom side of the range, 44 to 46k. You can almost treat this as like a low time frame range, right? This is your prices balanced, and then you trade the break of the balance or the range breakout in the direction that it breaks. And again, given the market is generally bullish, you'd be more biased towards upside continuation rather than selling the breakdown, generally speaking, right? One final thing to note, the setup that we discussed, the market structure one from the last live stream, aged quite nicely. I didn't get the opportunity to capitalize on it myself properly, which sucks. Been a bit of a slump, but that's maybe a topic for another video. But what we basically discussed was the good old kind of market structure setup, where you have low, high, lower low, lower high, lower low, and then when you get a higher high, right, thus breaking the pattern, pullbacks into the last high tends to be a good area for a continuation setup, right? It's this old model that we had here. You've got a low, price makes a lower low, but then makes a higher high, right? So you've got, assuming lower highs and lower lows in the past, you've got low, high, lower low. If the market's bearish, what do you expect? You expect a lower high to form somewhere. What does the market do instead? It forms a higher high. And that shift of lower low failing to make a lower high and instead makes a higher high, that's your kind of bullish or evidence, some evidence for bullish reversal, right? And I've got a whole market structure video, etc., etc. I'm sure you've watched it, and I think highlighted this entire cluster area here as a support on the upper boundary of 46k, and that's where the market bounced and took you very nicely into your trouble area. So if anyone took that, well done. But conceptually, more important than the single trade itself is understanding the underlying market structure logic, at least in my view. Does that make sense so far? People following? Somewhat helpful, comprehensible? CJ Dangles asks a question I quite like. So since we had a fake break to the downside, you think it's likely we get a fake break to the upside? It's certainly possible, right? Sometimes when you get a range, price will kind of mirror both sides, which is kind of what you're alluding to, if I understand correctly. So you'll get something like this. So you'll get like range high, range low, or value area high, value area low. It doesn't really matter, right? Those are your boundaries that you're trading within. Price trades kind of at the mean, whatever, then breaks but fails to gain acceptance and falls back within the range, right? Then trades towards the range low and then does the same thing on the range low, where it breaks, fails to find acceptance, and trades back within the range. So you essentially get some sort of symmetry where you get a failed breakout to the upside, and then you also get a mirror of that where you get a failed breakout to the downside, and actually the range is ultimately intact, with these two being the failed breakouts. So the question is, given we've sort of had that to the downside here, is it possible to have it to the upside at resistance? The answer is yeah, it's certainly possible. But if the market is bullish and there's underlying strength in the trend, you're much more likely to have traps for bears rather than traps for bulls, right? So again, it's worth thinking probabilistically. If the market's bullish, who's going to get trapped? Are bulls going to get trapped, or are bears going to get trapped? Or at the very least, which is more likely, or which is the setup you're going to take? Or I can rephrase that, if the market is bullish or there's underlying strength, you know, if there's strength in the underlying trend, which breakout is more likely to be a fake? Is it a failed breakout to the downside, or is it a failed breakout to the upside? And again, if the market's strong, you expect the downside to fail, but the upside to be successful. So yeah, it's certainly possible to get something like this up here. I just think it's less likely. Mango says, in this context, isn't the lower low to higher high market structure change the same like a bullish breaker setup? Yeah, it's all the same stuff. It's all market structure predicated reversal models type of thing. So yeah, that's Bitcoin. We know the range. We know the levels. I'm working with this for the time being. I don't think I've got a whole lot to add to that. If you've got any questions, just let me know. We can always come back and discuss. ETH USD. This is one I made my short video clip about. So hopefully you've watched that. If not, that's fine as well. Unlike Bitcoin, the ETH weekly chart has some useful context. The ETH weekly kind of looks like the Bitcoin daily. You had this kind of multi-week rally, a big nuke, which retraced into the base or the origin of that same multi-week rally and closed quite bullishly. So, I mean, purely on the weekly time frame, this is your range, right? You've got range low, the base of the rally, range high, the top of the rally. But I think generally speaking, the same type of logic applies. If the market's bullish or has underlying strength in an uptrend, etc., etc., you know, if your directional bias is bullish, you generally expect resistance or support to hold, and you generally expect resistance or the range high to fail. That doesn't mean you long into it, but you know, the conclusion of this kind of range, if the underlying trend is bullish, is a break to the upside. So if you want a weekly chart for ETH USD, I think you could literally just box out these two candles and have a jolly good old time from a high time frame point of view, right? So the daily time frame's got some pretty good levels in this regard as well. As per the short video I made, I think 3. Like, again, you can get away with a small number of structures, which, in my view, encompass what's important. So the first is the all-time high breakout, whatever thingy, around 1400. So this was the consolidation. And again, this is like a multi-week ass-ending triangle type of thing going on. before we had the all-time high break through the 2017 high as well. So a lot going on at this level, and we essentially got a rounded retest into it, which held. Happy days, and this also gives us a nice line in the sand. So this is the 2017 high, it's the weekly block support rectangle demand thing. There's like a lot going on at 1300 to 1400. It's like the most important or the best looking or the most structurally significant blah 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 support that we've got. So accordingly, if we get any high time frame weakness below it, I think it's probably a signal to get the fuck out and look to buy lower. Generally how my system works, I'll find levels which I think are really good and trade around them. If they work, I'll buy them. If they don't work, I don't try to knife catch their failure. That's a really important part. Like, everyone gets the first part, that okay, this is a big level, I want to buy it, but a lot of traders always mess up the second part, that the level failed, what are you going to do? So what you'll see a lot is you get a really important level like this, and then let's say it fails, right? You get a daily close below it, or the market shits, whatever. So the experienced traders will know that contextually, the most important thing that's occurred is that this has failed. Therefore, I'm getting the fuck out. I want no part in this until it does something, right? Now, what less experienced traders will do is they'll still be in the same buy the dip mode, unable to change their mind. So they'll start buying every single shitty support that exists, right? They'll buy this, 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 and just hope that one of them works. It's kind of like the Bitcoin 6K breakdown, right? So 6K was like the most important, like multi-year, whatever, support on Bitcoin. As soon as that broke down, you had people buying the dip at 5.8, 5.5, 5.4, 5.2. It's like, mate, like, by your own logic, if 6K is a massive level and then it breaks, does it really make sense to be buying? Sorry, I think my mic cut out. Are we back? I think we're back. The basic question is, like, by their own logic, if 6K breaks and you're saying it's like a massive, massive level, does it make sense to buy $100, $200, $400, $500 below that level? Like, to me, it's just like a really basic contradiction in terms. On the one hand, you're arguing that this is a massive level, and if it breaks, oh my god, this level's so important. And on the other hand, you're buying a couple of percentage points below it. It just doesn't make any fucking sense. It's either important, in which case if it fails you get the fuck out, or it's not important, in which case you can trade around it. Both can't be true, right? It just doesn't make any sense, in my view at least. So going back to the daily chart, that type of level is this 1300 to 1400 type of area. There should really be no excuse for this to fail on a high time frame basis. We could take some liberties and just draw out this whole consolidation, but we land around the same area, 1300 to 1400. Pretty straightforward line in the sand. Okay, two other levels or structures. So where is support? I quite like this range low at around 1600. So this is the support built on the way up, retested before the leg up, found support, retest, like, and more recently resistance. Like, it's just a nice pivot, right? Now, instead of just cutting through these candles here, I think we can take a bit of a liberty and draw a cluster or a box close to the more recent bit of price action, landing around 1600 again, okay? And then in terms of so that's the support below us. Where's resistance above us? Again, it's not entirely clear. I don't presume the all-time high to be resistance, but I do quite like paying attention to the little consolidations that form below the all-time high breakouts. So in this case, it would be this cluster here, closer to around 1700. Or if you want to reverse engineer it to some extent, you can ask yourself, okay, if this market's going to be bearish and it's like an ultimate trap, which we don't want to think in those terms generally, but it's a good way to get levels. It's like, okay, if this is going to be bearish, where is the last reasonable area for a lower high to form, right? If this is a kind of high, low, if this is the start of a bearish market structure, where is kind of an A+ spot or candidate for a lower high to form? And it's kind of got to be here, this pre-breakout range, right? And that falls at around 1800 or thereabouts. Now this looks pretty busy. And we can just make that slightly thinner. We're not body shaming around here. It just makes the charts look easy. Well, it makes them look easier to navigate if we have less thickness with our drawing tools. And so we essentially end up with an ETH chart that looks like this, right? So similar to Bitcoin, your brainless bullish continuation trade is through 1800. Some version of this. Again, when I draw squiggly arrows, it's never perfect. It's never the expected path for price to take. The important ideas I'm trying to convey with this sort of squiggly line crap is one, which level matters, two, the direction in which I want to trade the break. Anything else, like, oh, how far does it pull back? Does it do that? Does it do that? Like, that's irrelevant. Those are decisions they have to make, like, depending on what price offers. But this kind of gets the idea across. The last reasonable area for a lower high, in my view, is this pre-breakout cluster at around 1800. So if this area were to fail, so like a close through it or strength through it, however you want to call it, I think we blow the roof off of this thing. All-time high, not expect to be resistance, and probably just blast through 2k into whatever, right? A real extension through the all-time high. So that's the bullish continuation trade, something like this. The pullback trade, you know, if, for example, even temporarily, this lower high area does its job, where's the nearest support to the market on the pullback? And it's this 1600 area. I wouldn't mind punting this, at least for a bounce, if not a kind of swing trade into here and higher. Not much to say about this level. Previous range low, it's just been a bit of a flippy boy, right? Support, resistance, resistance, broke it. So you're expecting, if the market's bullish, like something to happen here, right? So I don't mind this as your shallow pullback continuation idea. And of course, sort of to some extent, my bread and butter, if the market just starts nuking and looks like a total piece of shit, I really don't mind putting some risk on at the do or die levels. That, okay, it has to at least bounce here or the market goes to zero. And for me, that would be the 1300 to 1400 type of weekly area that we started with, okay? Now notice, I'm not terribly interested in shorting this market. I don't have a plan to sell it because I don't really have high time frame reasons. Like, while we're bouncing off of weekly support, I don't have a high time frame basis to lean in the bearish side or to have a bearish directional bias. So I'm kind of looking for longs which meet some of the criteria that I've outlined. The continuation long looks like that. The shallow pullback long looks something like this. And then the do or die, oh God, please help me, are we all about to get rug pulled by Vitalik? Long looks like here. And then if this one fails, then I know, okay, if the high time frames are fucked, I'm not interested in longing. Maybe I can get short if I'm lucky. Okay? And this also should kind of answer the question, should I look to buy or sell every single one of my levels? If you're trading on low time frames, maybe, possibly. If you're trading some sort of higher time frame based system, or a system that gives weight to directional bias or the underlying trend, whatever, you don't need to buy and sell every single level. You just don't, right? Some levels you could say, for example, I'd take profit here, but I wouldn't sell it, right? Like that in my view is reasonable. But, you know, I think a lot of the time we just get bogged down by having all these levels and we think, okay, I need to sell everything above market and buy everything below market. That's not the case. Not every level is good enough for a trade. Some levels are just about good enough to take profit, maybe compound the position, blah, 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 right? They're not, you don't need to risk on every single thing you've got on your chart. At least when it comes to market direction. Does that make sense? Also, we are smashing it almost at 200 likes. Thank you very much for your support. Subscribe to the channel if you haven't already. Monday, Wednesday, Friday, 7 UTC PM. We'd love to have you here more often. Cohen says, what do you mean by sell it? You mean just short or close position? That's the thing, right? So in this instance, if I were in a long, I'm not right now, this would be the type of level where I'd be reasonably happy to close longs, but I wouldn't want to short it if I were flat, right? Slight difference there. Okay, that's ETH. On the traditional markets side of things, there's some interesting developments going on. Again, I'm not an expert in traditional markets or whatever, but just some charts that look interesting. So, being bearish, the S&P is how you die, right? It's just how you lose money. The only people who make any money being bearish the S&P are those kind of selling crash books or doomsday prep, crazy proprietary indicators which last had a good signal in like 1929 or something. Like, just being bearish this thing doesn't make sense, right? Like, it's been in a secular uptrend since like forever, basically. This thing just goes up, right? So that's kind of the starting point for equities. The bears tend to be loud, and have like an audience and everyone likes a bit of doom, but ultimately you don't make money being short this thing, right? It just doesn't, it's just not how it works. In terms of the, on the TA side of things, the one kind of level that I'm paying attention to is the top of this weekly breakout level, right? So I think part of the reason we might continue getting some choppy price action, I mean, this looks bottom-ish to me, but I think we might continue seeing some chop because the most recent weekly candle closed that resistance, and this could be setting the weekly wick to some extent. Or at the very least, you'll still get systems selling rallies after a close like that, in my opinion, right? So if you want your S&P bullish confirmation back on the table type of thing, I think a strong, independent, full-bodied candle above this prior breakout level here, that probably sends it towards all-time high. And I mean, maybe it chops from there, who knows? But I think the bearish case, look, you know, for those looking for these types of moves or whatever, quickly eradicated if this breakout level gets reclaimed. Okay, and I think that's to some part the explanation, not explanation, but the context of the choppiness we're seeing at the moment, right? Like, this just does not look pleasant or easy to trade. There's a lot of macro stuff going on. So maybe just looking at the weekly time frame with the lowest noise makes the most sense, at least in my opinion. Okay, but something to be aware of nonetheless. I just wanted to get across the kind of macro point that being super bearish this thing isn't cool. It's not how you make money. But it's still important for us to monitor because we all know Bitcoin always goes through different identity crises. You know, am I following gold? Am I following the S&P? Am I uncorrelated? You know, am I sensitive to yields? Do I not care? It really varies. I think that's a strength of Bitcoin, but, you know, when these correlations pop up, I wouldn't trade them outrightly. I just have an awareness of what the macro is doing, especially as we become a quote-unquote macro asset and share portfolio space with the type of entities who care about the macro. You know, we may be subject to rebalancing just like any other asset. So at least having a broad overview of where these things sit, probably helpful to some extent. But let me see if I missed any questions. Bernd says SPX is designed to go up forever. Yes. Купил пару битков в кредит, буду на 200к скидывать. Ну, удачи. Удачи. На кредит, конечно, да, ничего не скажешь. Thoughts on DXY? Yes, we can take a look at dollar stuff. I want to talk about gold really briefly, because, I mean, just look at this thing. Can you imagine, like, looking at turmoil, chop, risk off, whatever, in equities, and you're thinking, oh my god, let me fly to my safe haven shiny rock, and this is what your shiny rock is doing? I mean, come on, right? You can't be happy with that. I think generally, like, my generation, the digital native side of things, I really can't think of people my age buying gold. I really just can't. It doesn't make... I can't think of a world in which, you know... I mean, what do you think? If you're in your, you know, between 18 and maybe 30 years old at the moment, if you're trying to preserve your wealth, how much gold are you going to buy? And even if you are going to buy some, how much relative to digital Ponzi's? Probably not that much, right? I can very much see the bullish case of kind of Bitcoin eating gold's lunch or dinner, certainly for internet native generations or whatever. The high time frames on this look rough, right? The monthly time frame especially. So part of the reason you don't want an asset to trade back close to its all-time high is because if it fails, it just looks like the biggest piece of shit ever, which is what happened to gold, right? You had this strong breakout, it failed, and it's just been going down since. Bear in mind, this is a monthly chart, in gold, no less. It caught a bid, I think it was on the top side of this range here, but even that level now, on the monthly basis, bear in mind, has failed as well. So it's just, you know, if you were to break down the price action of this thing, all-time high, failed breakout, retest, lands at support, and now failing as well. I mean, it's just been bearish development after bearish development, and I don't see any amazing, unless it does something like this, reclaim through 1770s or thereabouts, just under 1800, I don't see a bullish case for this until it lands back at support. And the nearest reasonable level for this I can find is probably this SR flip type of nonsense at around 1600. But it just doesn't look good, right? From the high, I know this is a slow-moving chart. It takes a while to play out, etc. But from the available evidence, it's just been getting stuffed at every turn, right? All-time high breakout, stuffed. Bounce at support, stuffed. I mean, not what you want to see, right? And I think Bitcoin, is it mega mooning? No. Does it look like this? No. So when you see this macro environment, and you know, I think Chinese equities were getting battered this morning. You just kind of look at the macro landscape, and you know, Tesla was getting beaten up, ARK, ETF, and all these other, you know, heavy speculative whatever ETFs getting beaten up. Gold doing no better, and then Bitcoin kind of holding up. You know, these are the formative moments which asset managers or investors, whatever, kind of look at to potentially get a gauge for whether to take Bitcoin seriously, in my view at least. Someone asked about the dollar. I don't love tracking DXY, like the dollar index, so USD against a basket of other currencies. I like to look at Euro USD because, you know, it's inversely correlated to the dollar index. So if dollar index is bullish, you'd expect Euro USD to be weak, and vice versa, obviously. And unless this daily gets rescued or something really impressive happens in the next, well, soon, then this looks kind of pukey to me. So from a market structure point of view, market structure's been bearish, right? You've essentially had lower highs and lower lows, and with this leg especially. But more importantly, it seems to be, again, this needs to kind of confirm or close, whatever, but kind of just eyeballing the chart. If you take this prior range high type of area, again, the specifics don't really matter. You've got highs, right? Like a big level, bounced once, and then it looks like it's puking through it right now. That just looks rough, right? It's like a really big daily level. Great excuse for a rounded retest for a bounce. It looks pukey. Unless it does some fantastic type of reclaim event, it's probably going to trade towards the lower side of that daily range, wherever that may be, right? So what does that mean for US, you know, the dollar index? I mean, unless this gets reclaimed, or if this continues to look how it looks, probably means a stronger dollar, right? DXY up, with Euro USD continuing to move lower. Now, does that set up a bearish case for Bitcoin? I mean, from a macro point of view, potentially, right? If we see a kind of rotation, I think as Legislatus tweeted, if this narrative starts to come to mind of rotation out of tech, dollar strength, etc., it could set us up in not the most fantastic way for Bitcoin. But just looking at it right now, it's held up well, right? So until it starts to break support or, you know, really shit away from resistance, I don't want to not position in something or sell or get rid of exposure simply anticipating the correlation to play out as it has been, right? Because this could end up being a very impressive decorrelatory, that's probably not a word, event, whereby, you know, Bitcoin breaks out while all this shit continues to move in a way that would typically be unfavorable for Bitcoin, right? So again, I can't give this stuff too much weight because it just doesn't have that weight in my system. I'm aware of kind of the dollar strength and potential S&P 500 and general equities chop or weakness in the back of my mind, but, you know, if no one's going to sell this thing, I'm not going to join them, you know? So we'll see. We'll see. And, you know, and this is our range for now. I'll play the break of the range if it sets up appropriately. We've talked about Bitcoin. I just wanted to add some color to the macro side of things, given we kind of have to pay attention to that from time to time. ETH BTC is what I want to talk about. What do you say to someone who says the technicals don't work? I mean, I don't know. I've kind of given up trying to convince people, because what benefit does it serve to you? Like, they say technicals don't work, you trade technicals and it works for you. Who fucking cares, right? It's not a team sport. You could say it works for me, and that's kind of the best argument that exists, to be honest, because, yeah, I don't know. I try not to bash heads with those people. I totally understand being cynical towards the overwhelming majority of technical trading, because like the stuff you see on TradingView, the stuff you see on YouTube, all these scammy Forex guru, whatever crap, people just drawing random triangles and then saying everything's going to go up. Like, I get it. Most of TA is trash. So I can't blame them entirely for saying that technicals don't work. Yeah, it depends where you look, right? It depends where you look. Back to ETH BTC. So it bounced where it had to bounce, right? This was our kind of market structure level of support that we discussed last week. It's bouncing there, which is good, right? Because there's no real support if this area were to fail. I mean, arguably back at the range low, but I mean, that would be quite a big puke from the highs. It's nice that we've seemingly avoided that for now. To get high time frame bullish ETH BTC, I just needed to break out of the range and actually hold there, ideally without retesting it. So you'll remember the disappointment that was essentially this breakout attempt here. We had the big boy range, broke above it, looked great, and then just shat below, right? Now bouncing, if it makes its way back above, I mean, if you want to be conservative, even just reclaims the origin or the point of breakdown, something like that, I mean, awesome. I think there's probably until 0.05 or thereabouts, there's a lot of space for bullish continuation in ETH relative to Bitcoin if that happens. Also bear in mind, this could be one of those market structure patterns that we talk about, where you have like this high, market makes a higher high, right? So this, oops, this is this, this is this, market makes a higher high, this is this, and then what you usually want to see, well, not even usually, I guess the first port of entry, port of call, I really can't speak English. The first area for bullish continuation is the point at which market structure was broken, right? So here. So you get a shallower pullback, and then you get your continuation, high, low, higher, higher, low. It's the first area for a higher low. You get a higher high, and, you know, number go up forever. Awesome. It's not always that comfortable. Sometimes what you'll get, as you'll know from the market structure video, is instead of the market offering that higher low at the breakout point, right here, so sometimes that doesn't happen, and you get a deeper pullback with the market forming a higher low somewhere between the breakout point and the previous low, right? Something like that. Now, these tend to be a bit more uncomfortable because, first of all, they take longer. Second of all, the pullback tends to be deeper by definition. And thirdly, you lose confidence because this first area looks like a failed breakout attempt. But ultimately, as long as the higher low is made relative to the last low, like, market structure is still bullish. So I could arguably see that developing in ETH, whereby you have, because the market structure has technically been bullish since this point here on the weekly time frame, right? You got high, low, higher, low, higher high. Then the question is, where does the higher low come in? Candidate number one was this level here, right? And it failed. Okay, where's candidate number two? Well, where could a higher low come in? It sort of makes sense that from a market structure point of view, it would be here. And that's sort of holding for now. And the confirmation of bullish market structure continuation, for me, reclaim the top of the range, we probably moon. If you want to be conservative, reclaim the point of breakdown, probably moon. Does that make sense in terms of market structure? So yes, you can continue from the point of breakout. Yes, that is the easiest point from which to get bullish continuation, but sometimes you have to wait for the higher low to be deeper than where you'd otherwise be comfortable. Cohen says, been seeing that setup too. Awesome. Yeah, I see it all the time. Something I pay attention to a lot. Fantasy Cricket Freak says, yep. Awesome. So yeah, that's ETH. ETH BTC. Is this going up? Oh, there it is. It's hit our level. So that's the bottom of that cluster reached. We'll keep an eye on it throughout the stream if it does anything. Bear in mind, this is a daily level. Doesn't need to do anything immediately. Yeah. Did BTC go up as well, I think? Huh. Yeah. So both ETH and BTC kind of reached their pre-all-time high daily resistance levels now. Okay. Any questions so far? Anything come to mind? I'm happy to go through the DeFi stuff. It's not too long. And then kind of hand it over to you. Prashant, I've probably butchered your name, says, cred Bitcoin on the weekly as a nasty or nasty? Whatever. Bearish div on RSI. Do you expect it to play out over the coming weeks? I'm not really the best at gauging high time frame bearish divergence stuff. You need to go over to the channel of my learned friend Cold Blood Schiller, or Cold Blooded Schiller, CBS, and he will answer all of your RSI div questions. I'm not the right person for it. I don't use harmonic patterns, Bernd, as part of my trading. It's mostly just levels and market structure. Big nasty. Yeah. How strong of a resistance is ETH 0.55 going to be? I don't know is the answer. But if we look at what the ETH BTC kind of anatomy looks like, purely structurally, there's just a lot of space back above the range high and then towards the next kind of support resistance. There's like 50% of space there. So I don't think it matters how strong that level is. What's your advice for beginner lost all his money on lev trading? So the thing is, I'd probably say, oh, well, don't do it again, but that's just not helpful. I'd say before trading again, go to your leverage trading platform and read everything that's on there in terms of contract specs. Right? What's the tick size? How's maintenance margin calculated? What's the difference between cross margin and isolated margin? Just learn, you know, what are the funding periods? What is funding? How's your liquidation price calculated? Just everything. Go and learn every single thing you can about the specific contracts that you're trading, and only then, once you've got a system and actually understand how leveraged futures work, try again. But not until you actually understand what you're trading. Like, Leplot, I agree. Like, normally you just want to say, well, look, just don't use leverage. Like, stop leverage trading. You've lost everything. But almost every trader I know at some point has been absolutely wrecked trading leverage. It's more a question of what do you do after that? Do you keep repeating your mistakes? Do you keep getting wrecked? Or does that actually act as an incentive or a mechanism to, like, for you to start learning and to take it seriously, right? So I think just saying don't leverage trade is the easy answer. It's like the cop-out answer. But realistically, these people will go back to leverage trading, so you might as well give them some advice they can take. Which in my view is, learn what the fuck you're actually doing. Can you explain the simple way, what is the difference between perpetual futures and options in crypto? I mean, they're different products, right? Perpetual futures are futures contracts which don't expire, and they're supposed to mimic the underlying. So spot and funding is the mechanism by which the perp is supposed to trade close to spot price. Options are a different product. Ted makes a point that I generally agree with, that everything is moving so much right now, stick to spot. I mean, yeah, like, it depends, but for the most part, especially if you're altcoin oriented or if you've got like a decent sized portfolio, the need for leverage has been pretty low. I mean, more recently I get it while the market's ranging, but for the most part, cyclically speaking, there hasn't been a huge need for it. Will leverage trading get harder to profit from as more and more people stream into it, says Mighty Man? I don't think so, man. We've seen that this cycle, right? We've seen that this cycle. You've got way more, like, futures volume, and the amount of people trading on leverage is higher than ever before, and they just get licked. They just get liquidated and over-leveraged. And in a bull trend or in a really strong market, buying those long liquidations where the context is appropriate can make for a really good entry. Do I think ranging markets are predictable? I think risk-defined is a better term than predictable At least with ranging markets, you like know where to do business, the boundaries of that, and then what to do if those boundaries break. If the market's up only and it just keeps going up and doesn't move sideways on any time frame whatsoever almost, then that gets a bit trickier, you know? Let's look at some DeFi stuff and then we'll go back to some more questions. So Aave looks good generally. Against Bitcoin, I think if it gets back, like it bounced from a really nice high time frame kind of retest level. So prior highs here, bounce, and then the first trouble area is being reached right now. You can even just have this as a range. I think anything which looks like this against Bitcoin will probably be really good. I mean, on the weekly, this is what I mean, right? It just bounced where it should have bounced and looks okay. Into resistance now, but if that clears, you're good to go. HOLYPERP, which is what most of you will be trading, I imagine. This is the crazy thing about DeFi, right? Like, you look at this thing and you say, well, yeah, you know, the market went up a lot. It broke out. It came back and it retested the breakout level. That's healthy. That's good. You know, very straightforward, orderly trading, etc. But then you measure it from high to low and realize that's a 50% pullback from the high to the low. That's a lot, right? That's mad. So I think that's where a lot of dissonance comes when it regarding like where to enter the DeFi perps. People look at it structurally and think, oh, well, it hasn't really pulled back that much because, you know, look at all these levels it hasn't tested, blah, blah, blah. But then you actually measure the size of that pullback from high to low and it's like 50%. That's a lot. Yeah, so you can see I've got a daily level at 420, no pun intended. It looks really nice on the intraday timeframes as well. Pretty much this prior range low here. We could even, we could do something like that. Whatever, more or less 420. You could add this point of breakdown here. It doesn't really matter too much because it's a daily level. Like you'll either know it's broken or it won't be, right? So I think if we get a daily close, and it kind of looks similar to Bitcoin in that sense. Like you got the first test, second test, third test, and again, this is what I mean in terms of a level. How much is it doing its job? Which side is getting fatigued, so to speak? Big nuke, smaller nuke, higher low, almost no nuke at all, higher low, and it kind of poking its head above it now. Again, hasn't confirmed, whatever that means. Daily close needs to come in, blah blah blah. But I mean, it shows that pattern quite nicely. Pretty straightforward for Aave. You've got like a big level at 420, especially on the daily time frame. Lows, 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 retest, etc. You get a big break of that. It probably gets sent, and you can just use the highs as your targets there, if that makes sense. On the daily time frame, pretty straightforward, right? Here's that where that 420 level comes from. If that breaks as resistance, you have some space, purely level to level, right? 12% until okay-ish resistance, and then probably all-time high and beyond if it makes sense to do so. So yeah, I mean, purely structurally, if you want to be conservative about it, we can just pretty much box out where the breakdown took place, 420 to 440, and make the argument, break of this area, then your risk defined, and your target is like basically the high. So that's Aave. Comp against Bitcoin is... Ooh, hello. Comp against Bitcoin is still range bound on the weekly time frame. I think trading the upside break of this will make a lot of sense if/when it happens. But the levels on this are pretty good. So this is your weekly range. Previous support turn resistance, previous resistance turn support. You can't really ask for much more than that. So for Bitcoin outperformance, something like this obviously makes sense. It's already faked out at this level once. So if it closes above again on the weekly, that's far less likely to be a failed breakout. I'll see that a lot. You know, I've talked about the double fake out pattern type of bullshit. When you get a close above, close below, the level is once again resistance. But if it then closes above again, it's far less likely to be a fake out. Like, it's very rarely the case that you get close above, nuke, and then close above, oh, look, it nuked again. Like, if it gets above it again properly, like a full-bodied candle close, having already faked out once, it's usually a trustworthy break. Something like that. That's your kind of window for comp outperformance relative to Bitcoin. As for the comp USD pair, I think I had a level here. It actually broke the level that I thought was reasonable at around 450s. I think we can take the same liberties and map out the pre-breakdown structure, which seems to be around 450, 460. I think as long as this area holds, and it's currently retesting it, certainly it shouldn't be engulfing the thrust candle. As long as this holds, to me the highs look vulnerable. This looks decent. And invalidation is pretty straightforward. It should have no reason to trade back below 450 on a closing basis. But yeah, this isn't bad, right? It's kind of like Aave just a step ahead, whereby you kind of, in a similar vein, had your high time frame retest. Aave is currently retesting its breakdown underside structure, whereas Comp seems to have reclaimed its own equivalent as support. So if this continues to hold, I think the highs are vulnerable. Doesn't look bad at all. Looks like a nice flip from the available evidence, which can always change, blah, blah, blah. Curve BTC, don't know, don't care. USD pair, a bit choppy. I think, again, like it's no secret that you can take one or two models, if you will, and apply them very similarly to a lot of charts, especially if they're correlated or in the same sector. Like DeFi, we kind of work backwards. Where did the big breakdown come from? This is the leg. So we look at the range or the consolidation that formed just before that, the supply zone, if you will. And you can see in this case, you've got some prior lows coming in as well. So confluence, hooray. Same thing. This is resistance. You get any strength through it, the highs are vulnerable and beyond. Do I have link levels? Yes, I do. So yeah, sort of the same for link. I really like 32 as a level. I'm fond of the 26, 27 reclaim as well, but it seems to have traded a bit away from that level for the time being. So the dip buy entry seems to have already played out over the last few days. So the momentum continuation one, again, where is the floor? Where did it fall out? Fell out on this leg here. Currently resistance. So strength through 32s. We go back to the discussion we had at the very beginning of the stream. Is the all-time high resistance? Probably not. So your risk reward on entering through 32s, daily close above or whatever, is better than it seems, because you'd expect this to roll over if your interpretation of the market is correct. Almost at 300 likes. Let's smash it. Wow, that sounds so good. Let's smash it. Sound like some sort of fucking drone. I am having fun, I promise. SNX. Yeah, I mean, look, this is the beauty of it, right? I can show you one or two setups, and then you can sort of work backwards and figure this out for yourself and apply the same stuff. Like, where is the floor? Where did it fall out? If it reclaims that, it's probably good to go. The all-time high, unlikely to be the most compelling resistance in the world. Same thing here, right? Previous support resistance thingy at $23. Breakout, support, retest, nuke, right? So clearly something going on here. And we get confirmation of that, or validation, on the most recent retest, right? So we know that if we get full-bodied, meaty candle close, a real kind of break and imbalance through 23s, that means resistance is broken, and at that point the all-time high and beyond is vulnerable. Sushi BTC sideways, along with Sushi USD sideways as well. I think it's a matter of time until this thing goes. I think Sushi generally has been pretty shit to bet against it. Any of these nukes have just been swallowed up completely. Like at some of these junctures, the market really looked quite precarious, and the dip buyers don't seem to care, right? Especially if Uni goes up. You know, I think Uniswap V3 is right around the corner, and I think Sushi as a competitor just benefits from further innovation and flows towards DEXs. I think if you're lucky, you get a dip into 12. I know it's been tested a few times, but that's a range low I personally don't mind rebuying, simply because if you're wrong, you're really wrong and you're invalidated quickly. So from the kind of optimal risk-reward point of view, it makes a lot of sense if you're lucky enough. Otherwise, you may have to play the old breakout chase game, which has been really difficult for this asset, right? So Like, I'm not fond of drawing any daily levels on the top side because it's just been a bit choppy. This may be one of those pray for a dip or pray that your breakout buy isn't the top. Like, the range low is super clear. The range high is really not. So that's just the reality of what the chart looks like for me, at least. Yeah, Uni looks good, right? Uni looks good. It's closed above its all-time high, candle close type of level, and just set a new all-time high. Currently finding support there. I think this is okay. Like, I generally don't trade at candle wicks if I can avoid it. So that's not a setup that makes sense for me personally. But, I mean, given the whole all-time high thing, it wouldn't surprise me to get some sort of continuation off of... away from the low 30s. Just not something I can trade myself. The closest area that I can do business is a kind of all-time high candle close retest, which would be closer to 28. If it kind of comes back to the breakout level, that's something that I could reasonably justify punting. I just don't think the odds of that are particularly high. So something like this, under 30 for a dip is something I could get involved in. I just don't love the probability of it happening. But if it does, cool. And as we discussed, if the market's really bullish, it should have no reason to really spend too much time at or around its all-time high level. So any price action that kind of goes on in this area generally should be pretty quick if the market's going to send north. Wi-Fi, BTC... the high time frames against Bitcoin haven't looked that great for a while. Just from a market structure point of view, low, high, lower, low, lower, high, lower, low. You know, high time frame market structure against Bitcoin hasn't been the best, and it's currently at monthly and weekly resistance here at 78s or thereabouts. That's how it looks on the monthly. Sorry, on the weekly. On the monthly is just like where the most recent breakdown took place. So outperformance relative to Bitcoin until something changes doesn't seem incredibly likely. I mean, you could make a case that, you know, level to level, there's a lot of space moving from A to B, but we just looked at kind of weekly and monthly market structure, not too fantastic. As for the perp, again, it's the same DeFi thing that we discussed. You had support, you had a nuke, market's now retesting the origin of the nuke. Generally, if it gets above that, that's your bullish continuation setup, and the highs at that point are vulnerable. But for now, at resistance, strength through 40s, 41 probably, thereabouts. That will be much better than buying resistance, in my opinion. But again, right, if you're faced with a DeFi basket, for example, like these blue chips, and a lot of the setups, especially on the USD pair, like we discussed, are similar. That's where the BTC pair comes in to be helpful, right? Because if you want to pick the... Like, if they're structurally all very similar, so you can't distinguish which one is better than the others purely from the USD chart, that's where the Bitcoin chart, it's one of its many use cases. You can go and see which one is looks positive relative to BTC, and then you've got kind of confluence. Okay, so they're all the same relative to USD, but this one looks good against Bitcoin, this one looks trash, and this one looks, you know, all the equal against USD, and this is the BTC pairs, right? So they're all the same against USD, right? This kind of reclaim the floor, blah, 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 bullshit structure. So you think, okay, well, which one do I trade? There's like 50 of them. And then you see one of them is really good against Bitcoin, the other one looks shit against Bitcoin, and one just doesn't make sense. Your factors of confluence point towards the one showing strength against the most pairs being the better pick, if that makes sense, right? Someone asked about BNB. It kind of has to hold here. If you're going to bet anywhere for continuation, like after a move like this, it more or less has to be here, right? I think and nowhere else really makes a whole ton of sense. You've got the all-time high candle close, broke above it, testing it as support. Like this is literally do or die territory where you're going to get your best risk reward for longs. So if you're bullish BNB from a technical point of view, this is the area where you bet, because if it fails, there's really not much else. It probably retraces a large portion of this weekly candle. So I don't mind this as your kind of do or die punt, just given where it's landed, right? You can kind of see that on the daily time frame as well. You know, if we take the bottom of this range, which we also know has weekly confluence, if that fails, I mean, where the fuck do you go from there, right? Like, where's the next support? As I mentioned, it probably ends up filling up a lot of this leg into this area, and that's a 40% pullback. So do or die where it is right now. If it dies, don't try to knife catch it on the way down until it reaches something a bit meatier, if that makes sense. Let's add that and see what's up next week. Because again, a large part, I think, of the BNB rally, arguably the Coinbase stuff, but also I think a big factor of it was Binance Smart Chain eating Ethereum's dinner. A lot of participants were priced out of interacting with these smart contracts, out of DeFi generally, because gas fees were just so high. So BNB came to the, BSC came to the proverbial rescue, and then we also know CZ was more or less fucking around with ETH by disabling withdrawals, etc. So, the narrative's just aligned for this rotation towards the affordable DeFi hub, which happened to be Binance Smart Chain, and BNB was obviously, a beneficiary of that rotation. So if that's going to continue, it kind of has to continue from here, in my opinion. So let's keep an eye on this. And yeah, there's a bit of a pushback, as Fantasy Cricket says. We discussed EIP with one of our guests, which should help with scaling, fees, etc. So we could see a bit of a reversion in that narrative. And ETH price action has certainly been supportive of that. I don't really have strong views on ADA. I think it's one of those things as well where when ETH became unusable, its competitors just mooned. Layer 1s, Layer 2s, it just became a reasonably straightforward rotation trade. But now with, EIP on the table, and I think some of that momentum waning from the other chains or layers, we might see ETH claw back some ground. Right, so I think from the ADA point of view, the only level which I think is reasonably important to me is at around $1 here. I know this is retesting the top side, but it's just I don't love it personally. Against Bitcoin, it's retesting support as well from this prior range low. So ADA at support. BTC pair probably looks slightly better than the USD pair, but, not going to say it's a support if it's at support. Sorry, not going to deny that it's at support if it's at a level of support. Just me personally, if I'm going to do business, has to be a bit lower. But if you're an ADA bull, this is your must-hold type of area. Let me see if I've missed anything in the chat. If you would trade the smaller time frames, would your setup be the same? Yes, for the most part, yes, it would be. But again, just as a reminder of how what most of my trades look like, the kind of model I use, if you will. So, high time frame level, low time frame first trouble area. And that's a short-term trade, or high time frame level, high time frame first trouble area, and that's the long-term or swing trade. This comprises like 95, 98% of my trades. And you see what they have in common is they're both based on high time frame structures. If I'm trading the first test or standing in front of a big nuke or a big move into a high time frame level, I normally just ping the reaction for a day trade into low time frame structure. So like daily support into, let's say, 4-hour resistance, right? And that's the day trade, just almost scalping the reaction from the high time frame level. If I'm trying to set up a swing, again, it's based on the high time frame level, but in that case, I'm going into a high time frame trouble area. So it's just like buying daily support to sell it at daily resistance. Now there's some room for discretion where I'll trade like a low time frame level, obviously short term, into a low time frame first trouble area. But for the most part, my success rate plummets, my win rate, whatever, when I move away from using high time frame levels as the base for my trades. So it's more of a question of, what am I doing at the level? Am I pinging it and playing the reaction, or am I setting up a swing trade? Sometimes both, sometimes first I get this, then I get this. It really varies, but most of my stuff falls into this category. I consider the H4 a low time frame. High time frame, the lowest I go is daily. On the Samcoins, these are the new listings. I'm going to kind of wait for a bit more price action, maybe, before developing any or like strong views on these. FTT tends to move kind of lockstep with Bitcoin, sort of. And I also trade on FTX, so I hold some of this naturally for the fee reduction benefits side of things. Notice how, again, it's not too dissimilar from a lot of the DeFi stuff, where it had a big breakdown leg, and now it's kind of battling to reclaim where the breakdown came from, right? So, same old logic. 31, 32 is that kind of breakdown resistance. You get strength through that level. You have an objective in the form of the range high at 34, but then probably, especially if Bitcoin goes up, you just get trend continuation. And I mean, this chart is mental, right? It's like an up-only chart so far. So when you get those types of bullish setups, you generally want to let the trend do its thing. HOLYPERP is the index. Ray. I'm sort of comfortable making the same argument for Radium. Again, less price action to work with, and these new listings, TA can sometimes just suck, right? Just be straight up, TA can suck. But we have something to work with, very tentatively. Same old floor at around $10, nice little psychological level. You know, strength through that. High looks vulnerable. Medium conviction here, because again, it's not really a high time frame type of deal, but maybe worth paying attention to. I'm at least going to add where the lowest close came in. Let's do this. And see what happens. Not a whole lot interesting on Sol BTC. This could potentially just be a lower high. Not convinced, but I just don't like this kind of congestion-y type of structure, so not really my cup of tea. If I had to, I'd just use the lower side of this cluster as support and the upper side as resistance, and that's your range, but I don't love it generally, so I'm not going to pay too much attention. In the interim, the USD pair, I mean, BTC pair's choppy. USD pair bounced off of cluster top, but kind of didn't go anywhere. When this happens, I really like to like this sort of thing, right? You get like a perfect retest of structure both here, and the market just isn't having it, right? It's not leading you to continuation. It just keeps kind of drifting lower, making lower highs. I'm still happy to ping shorter term trades off of the upper boundary, but if I'm going to put on like a big trade with higher conviction, higher size, you get your confirmation or your quote-unquote safe entry above the upper boundary or at the upper boundary, but you get your meaty max risk reward at the lower boundary, right? So in this case, like, I'm open-minded towards trading again the upper boundary, given it's just been pretty good, highs to lows, you know, why wouldn't it hold again? But for the higher conviction trade, it would be this nuke or die closer to $10 that I'd be keen on trading. So it's always, you always need to conceptualize, if I'm dealing with a higher time frame structure, like a range which broke out, do I want to trade the upper boundary? If so, what are my expectations? And where's my invalidation? And kind of risk reward, or the lower boundary, asking the same questions. Typically, your upper boundary will come with inferior risk reward, but you get more quote unquote confirmation, right? And your lower boundary, it will look scarier and maybe feel shittier, but invalidation is closer, so you get your superior risk reward, and as a result of being close to invalidation, you can always size up a bit more as well. Because imagine you buy the upper boundary, and then price starts to drift and like gets to the lower boundary. So you might have to puke this only to rebuy it here, and not everyone can do that, right? Or you kind of buy half here, and then, you know, it just goes without you, and you had your other half at the range low, or you kind of have to hold it underwater and then get your full position at the range low with an average that's worse than it could have been if you just waited for the best entry. So, I mean, it really depends. Me personally, I always like to get involved in the do or die, max, all or nothing type of bullshitty, scary trades, because they just work well for me. So I'm more of the guys who get involved when it looks like a real piece of shit, but not yet. So that's Sol. Not a whole lot. Serum BTC, area resistance, around 135s. Not too... I mean, arguably, this is your support resistance flip at $5.7 here. I don't love it per se, and kind of the upper boundary of the cluster got chopped. I mean, I'm going to add it to see what's up, but nothing really screams at me on a chart like this, for the time being at least. Maybe I can check the lower time frame, see if I'm being an idiot, which is a daily occurrence, being generous. But no, it's kind of the same conclusions. And yeah, as mentioned, if we reach the... What did I say? Did I say 400 or something? I don't even remember. If we reach whatever like target I said at the beginning of the video, that'd be awesome. And then we'll go through like all the altcoins, all of them, in a separate stream. Just kind of get down to business. But I wanted to spend some much needed time on Bitcoin, on ETH, and the macro contexty bullshit, whatever side of things as well, which tends to be pretty important. Oh, look, ETH reacted to my level. I clearly had limit orders to sell 10 million contracts. Sorry, 100 million contracts. I just made $1 million. Never have to do a live stream again. I'm off to retire to my island. Thanks for thanks for watching, you know, all that good stuff. But yeah, I think daily closes will provide some much needed context for Bitcoin and ETH. If these levels do their job, we know that the shallow pullback target for ETH, at least on the daily time frame, is 1600s. For Bitcoin, it's... I mean, there's sort of an area at around 48s, which I'm reasonably fond of, so maybe that's worth paying attention to. But I'm unlikely to do a whole lot of business kind of between these levels. If I'm going to add size to something or really punt something with conviction, as I said, it would be for Bitcoin a break of this area. That's really where I'd like to get involved, because I think the asymmetry at that point would be hard to ignore. And for ETH, in a very similar vein, it'd be through 1700, 1800, or on a deeper pullback to 1600. All stuff that I said in much clearer and much more lucid terms at the beginning of the video, so be sure to check that out. Surprised you speak Russian, Cred. Почему? Что тебя удивляет? Ничего особенного. Well, I think that's all I've got for now. We've managed to cover a lot of ground, as I said. Hopefully you're watching this in the future, helping us to reach our target of 400 plus likes. Then you'll see me again before Monday. Thank you to the show's sponsor, which is Blockfolio, a mobile trading app with a feeless trading and asset swap experience. Be sure to check them out in the description below. And also, hopefully, have some cool collaborations coming up with them in the near future. Subscribe to the channel if you haven't already. All that good stuff. Follow Roundup Crypto on Twitter, because why not? That's where the updates are going to go. And go to trletter.com. That's trletter.com. And subscribe to our weekly newsletter, which trades a lot better than I do. And get those updates for free as well. Once a week, no spam, no bullshit, not trying to upsell you anything. trletter.com. We've been running it for God knows how long, and it's outtraded both of us. That's all from me. Take care. Hope you had a nice weekend. Steady head for the week to come, and I will see you hopefully before Monday for the shitcoin galore extraordinaire stream. Take care. Nice to catch up with everyone. Thank you for your comments, etc., etc. Much love. Moi moi. Take care.